Hello friends, this is Ella, your friendly advisor in Ireland. In this video, I'm going to talk about savings and investments, but not in Ireland, in your home country. I'll be talking about products which are from my home country, India. You may have similar products or same products in your country. If you find the terms to be confusing, I'll try to explain them as better as I can. You should look at similar products in your country. Without further ado, let's just dive in. When it comes to investments, it's all about risk, right? And you categorize risk from high risk to medium risk to low risk. When it comes to high risk, in India, we have a lot of unorganized sectors where you can invest, which give high returns, but they are risky too. One of those is chit funds, right? We call it chittilo in my mother tongue, where a group of people come together, create the fund, and a guy takes the total fund in 1 month. The next month, the other guy takes it based on their, need. And the interest of the other guy will be paid by the other guy. So it works that way. I don't want to explain it, go into details, but it's a very high risk. There's a chance that the guy who's organizing that chit fund can elope with the money, right? So it is very high risk, but it also has high returns. The other thing is private equity investment. You would be thinking, hey, how is it unorganized? Anything which is not publicly listed, it's unorganized in a way. You would have to have contacts to invest in startups or in other firms or invest into a private equity fund. There's a lot of work being done in that space to organize it. Like there are companies like Our Crowd, which allow you to do private equity investment, but it's still unorganized. The data is not publicly available. You need to rely on the startup company. So it's high risk. Again, if you believe in the team, if you know the people, then invest, otherwise don't. Within stock market, you have shares, options, right? Within that, shorting, put, call, those kind of options are very high risk. That may kind of lead you to gamble, and that may feed into your gambling habits. You might get addicted. So I never did this particular investment, but I think it's very high risk, and there's a chance that you lose a lot of money and you may become bankrupt, in short. Back in India, these would be the high risk investments. It depends on person to person what they categorize, but this is what, in my opinion, are really high risk. And now, coming to medium risk, when I say medium risk, the risk can vary from low to high based on what kind of investments you make, right? The first is gold. The gold price can increase, can decrease, it can stay stagnated. So there is a risk of investment. You may not lose entire investment, but there's further, there is no factor which controls the price of gold. There are many factors, but as an individual, it is difficult to track those. So gold itself is a good investment, has varying risk. If you want to invest in physical gold, you can invest in physical gold, but you'll be losing some money due to the wastage. But Indian government also has sovereign gold bonds, which you can invest in. If you apply online, you get it for cheaper, for 5 rupees or 50 rupees on each gram. And it basically tracks the gold price as well as pays you 2.5% dividend year on year. The only problem with that is it's lockable. When I say lockable, there's a lock-in period. You also have gold EFTs. I'll talk about EFTs in some time. The next investment is real estate. Again, real estate depends upon supply demand curve, right? It depends upon what the market has, what the market needs. It's also a great investment. I do invest in that particular space. But again, the risk varies. If there is a boom, you're good. If there's a bust, you're gone. So it's high, medium to high. I mean, given the current Indian economic situation, I don't think it falls under high risk. The next one is the equity, pick and choose diet stocks. So if the stock performs well, you're good. If the stock tanks, you're gone. And when it comes to diet investment in stocks, you become attached to that particular stock emotionally, like I did with Yes Bank share. So you need to be very rational when it comes to diet pick and choose stock investing. So these days I do not have time for picking up each stock, but I want to again go back to that. But I am currently investing in mutual funds through SIPs. So SIPs is the best way, one of the best way if you're thinking long term and if you want some money later in future at one point, because you are investing monthly a certain amount, which is tracking the index or, following whatever the stocks within that basket, and how well they are doing, how bad they are doing, depends upon that. So the basket investing any day, has stocks which go from high risk to low risk. Depends on the basket you are investing to. It can be small cap, mid cap, large cap, blue chip. So these define the risk nature of your investment. But as I see, it's not high risk. High risk would be something completely out of bounds. The next thing is ETFs and small cases. Again, these are also good investments. Again, any of these investments attract 15% on LTCG, long-term capital gains. Be ready to pay that. But again, they earn the money you want, right? Again, you have, at the end, you have Forex trading, which is also good, varying risk. Currently, India is doing bad. I think it will further do bad because, again, not bad in sense, the rupee may decline, but it is good investment in the other way, and good for our country if we want more FI, foreign institutional investing or foreign direct investments. And that's the, this would be in my an upper view of low to medium to high risk sector. Again, last but not least is the low risk investment. These cover, guaranteed returns. First thing is public provident fund. It gives 7.1% and you can max out till 1.5 lakhs. People would be thinking, why would I invest in PPF as I do not have tax benefit staying in Ireland? But 7.1% is not bad. It's over inflation. Anything over inflation is a good investment, in my opinion. So if you want to earn more money, PPF is the way. You can do 1.5 lakhs every year and you would get close to 40 something in 15 years of investment of 22.5 lakhs. So that's a great investment. If you go back to India, you can continue investing in PPF, and compounding effect, it always works. So you may earn more money, but being an NRI, you can only do 15 years. And then you have National Pension Scheme. It's also very similar to pension schemes here. There's a limit. You can take money only after 60 and you can take only a certain amount lump sum, and you need to have annuity. Again, the interest rates, the rates are very good. I would suggest investing in NPS for long term. And again, guaranteed income. And you have National Savings Certificate, which usually post office gives you. That's also a good investment. The interest rate is not high, but it's guaranteed. It usually follows or little more than the inflation. So that's also a not bad investment. Instead of putting money in Irish bank account, earning zero interest, better to push money into these investment vehicles. The next thing is bank FD. The interest rates go from 4% to 5.5% based on the term you are taking. Even then, it still follows the inflation. Not a bad investment. Low risk, very low risk. And NRO, NRE accounts do have term deposits. The interest rate is a bit higher on these deposits than the usual Indian bank savings account. So you get a bit more, okay? And then you have the life insurance from LIC or any of the firms, any of the banks now. They have good products. They cover life as well as give you return on investment. That's also not bad, given that you don't want your money to be ideal with you. The last but not least is you have corporate bonds and government bonds. Corporate bonds, I wouldn't say low risk. They would fall under the mutual funds equity space, but most of the companies which give out corporate bonds are AAA rated or AA rated, which means that they are in the market for long and it's rated by SEBI. So I would say those are low risk investments. Government bonds, you get 7.8% currently on treasury bills. So you can invest into those bonds too. Yeah, there are a lot of options. You'll be surprised when you compare to Ireland. In Ireland, you have very few options. A lot of people go for a second property right away after they have the first one, instead of looking at these options back in home country to invest and earn more than what we usually get in Ireland. One of the saddest part is the bank accounts literally give you nothing, and they take money for maintenance of your accounts and ATM charges. You lose money basically having money in the bank account in Ireland. So why not invest in your home country, earn good money for yourself. For other countries, you may have similar products which are low risk from government or from the banks or from provident funds or pension authority, and then you would have medium risk around the mutual funds and equity investing, and then you would have high risk in the unorganized sector. Hope you like this video. Do share, keep watching my videos. Don't forget to subscribe to my channel. I do offer tax filing services. If you need any services, you can write to me at allaboutirland247@gmail.com. Thank you. Have a good night.